All right, my friends, it's that time. It's time for Stock Market Mutterings for January 28th, where I shall take a grope in the murkiness and try to help you find some quality trade setups. Now, I know that the first month of 2019 is almost in the books. So just a little under 30 days ago, there you were. You were sitting there thinking, this is the kind of trader I want to be. These are the kind of changes I want to make for 2019. This is how special I want 2019 to be. Now, some of you are feeling that specialness. Some of you are not. So if you're struggling out there, take a moment, visit thelincolnlist.com, click on the Trade Room tab. You can trade with us live every day. And also don't forget, I just finished my brand new DVD called Rock Solid. I've been talking about this for the last couple of weeks. It's absolutely free. My gift to the trading community. I'll post a link up there. So if some of you are interested in learning some great basics and some great things about stock trading and technical analysis, check out that video. So here we are now. We are at the flag. That's what this stock market mutterings is going to be all about. We are at the flag. Now, if we go back to last week where we were talking about what's going to happen here in this market, is it going to back test some of this vicious rally? Remember now, after Christmas Eve, this thing has been nothing but bullish. We went on this really sharp V-shaped rally, climbing above the 50 moving average and topping out there last week on the SPY. Roughly around what was like 260, don't quote me to the penny here, 267.5, somewhere around that area. Now, we spent most of this week, remember we had Monday off, but we spent most of this week just in a really tight consolidation pattern. We had some selling in there, a little bit of back testing, but if you look at the market, it never really got underneath of that 50 moving average, and a pretty strong melty Friday, which puts us just right here in this short-term flag setup. So right now you're going to see something happen as we progress early on into next week. If not, maybe both of these scenarios plays out. Who knows? You can never write anything off. So let's first talk about upside potential. You know, we had this whole government shutdown thing going on, and there was a lot of emphasis placed on this, which I don't know why, because the market rallied 12, 13% or whatever it was while the government was shut down. Maybe that's a bullish signal, like people don't want any government or something. And then you had the speech there on Friday, which was just like blah, 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 whatever. It didn't do anything to the market. So if we're going to have continued strength, you got to look at this 266.80s to 267 spot. Just go back to, let's get the actual number here. It's on the 18th. It's 267 because it was 266.98 there on the 18th. The 18th high. If the market moves above that, or let's say first it gaps above that on Monday, you'd want to see it kind of retest that or hold that up throughout the day. But if it holds that or it moves through that, dips get bought in the index, then I would think you're pretty free and clear to get up towards this 200 moving average, which is sitting at 273. Again, I thought we'd see this thing fizzle out somewhere back here, but this is kind of like the same setup flag pattern back here where it broke out through this 259.5, and then you get this nice little spread. So I would think anywhere above that, you're going to probably start getting very close to that 200-day moving average right there, which now sits at like 273.5, 273.80 somewhere. Now, if there is weakness right now, at least for the short term until things change, you have to look down there at that 50 moving average, which is right now about 261. You see here not the last couple of days, but earlier on the week, you had a test of that. Then you had a test of that again here on Wednesday. So Tuesday, Wednesday tested that level, and the 10 moving average is right there too. And basically, you don't really need to be too concerned with the moving averages because that was the breakout support here from a few days back. Just look at the support, look at the resistances. But anyway, this area right here, let's just say 260. If the thing stays above 260, we should at least continue to either chop back and forth or work our way up slowly towards that 270. Now, if you start going under 260, then maybe you see some aggressive selling. Maybe you start working on some of these lower moving averages or maybe down towards the 256s. But right now, the way that it feels, which it can change at any moment, remember I like to trade off of feel a lot. The way it feels, all the dips have been getting bought. You've had some sell-offs, but they haven't really had that type of aggression that we saw in December. You don't have a lot of news out there right now. Maybe if the government opens up and they've been sandbagging all this poor economic data, maybe that could change something there. I mean, we got a lot of variables here. Most of them do lead to being bullish, like a trade deal. Anything that remotely gets done, even if it's half-ass and garbage, is probably going to be really, really bullish. So let's just see. There's a few numbers for you to work with. We don't make the calls here. We just kind of go with what happens, and that's it. So let's move on to a couple of stocks because That's what we want to talk about. I want to take a look at this SQ. SQ. I was talking about this thing earlier. It's a little bit, I mean, it certainly feels bullish, but I think right now you'd have to kind of walk a really tight line with being too bullish on this thing, because it's already made a good break. We had a nice break at 72.50. It moves up to 77.90 here. It's like I said, you got some room up here to 80s and maybe up to this level here from November up to about 82. But again, keep in mind, this thing's already made a breakout on the daily, and you're up paying it. There's a little bit of a chase involved in that. So I wouldn't recommend, if you're swing trading or you're holding this, that you chase this here as a long. That's not what I'm saying. What I'm saying is there could be a possible move to 80 if you're a day trader like myself. Wait for some pullbacks, look for some intraday setups, and see if this thing has a little bit more momentum to work its way up to 80. Now on the flip side of that, because we just trade ranges and we trade what we see, not what we believe or what's available to us, and things change at any moment, you also cannot write out the fact that if it does get vertical and you move early on Mondays, let's say to 81 or 82, it has a good $3 to $4 worth of range in it every day. If it gaps and runs like that early, I don't know how you couldn't look at the short side and something like that and think about, hey, this thing's a little bit stretched, because again, at Christmas Eve, where a lot of these stocks were, this was a $50 stock approaching 80. You're going to see a lot of those like that. So if it does stretch out here just a little bit more, that's what I would do. So you got two plays here. If intraday dips get bought, this thing holds, it moves through the highs of today on Friday, then I think you have room to 80 to 81. You have some long opportunities. Maybe not as much value there, but you do have it. If it does gap and it runs and it gets vertical, then I think your value lies to the short side. Also, we have a whole bunch of flag setups in stocks. One is Goldman Sachs, the old Goldman Sachs. I mean, again, here's another one. You look at these charts, you know, if anybody loaded up in your retirement accounts or any accounts, or you just threw some money at everything on Christmas Eve, you're doing pretty good. You're doing pretty good at just about everything. So this thing is also kind of flagging. I think your first look is the highs from the 18th as well. Very much replicate the chart of the market. If you get up through that 202 area, you're probably going to see a little bit more movement on this one. Not the most dynamic mover. If you're used to trading stuff like I am with Tesla, NVDA, Netflix, and those, maybe not the most sexy mover, but there is some range here on this one. One I haven't been talking about here much is TWLO. TWLO. This again is another flag setup. Now this thing can do some pretty solid moving. Obviously it's been running quite a bit. You know, I mean, it was $80. Now you're all the way up here towards 106, but it's doing what a lot of stocks are doing, and it's not so much. It does matter to me where a stock come from. So you first had that really big move from Christmas Eve to up to last week. And that's important, because once everything is just one-sided, lopsided buying, lopsided selling, you have to be careful going in that direction. Just like all these people were just piling in short on Christmas Eve or a couple days before Christmas, and then they get smoked. People start chasing rallies late after they see multiple candles on a daily chart. That's just bad trading business, and that's going to hurt you in the long run. So it does matter from where it came. The next step in all of this stuff that you're looking at as you look through these charts, I mean, I'm giving you names now, but it's going to look similar to a lot of the stocks out there. The next part of that is back testing some of that. If it's able to back test into some moving averages, pull back into some supports, hold certain levels, then it can digest that gain. But every stock needs to take a moment and digest that gain. So where I'm going at now moving forward is what it looks like right now, regardless of what stocks I'm talking to you about, and the overall, regardless of what stocks you're talking. From Christmas Eve up until last week, it was just vertical pretty much and linear. Every day it was going up. So now it looked like this week we pulled back. We had a couple of red days, some sideways trading action, but most of the major short-term levels in these stocks have been held up. So like in TWLO, you held your 10 moving average the entire week, which was 99, and now it's moved up to 100. So it's held those levels throughout the early part of the week. If it's able to build on that early on in the week, the market itself and the stocks that you're looking at, you most likely will get another leg up into, like I said, the 200 moving averages, all-time highs on some of these stocks. If they don't, and they start breaking down under those levels, then maybe we see a little bit more aggressive selling. But right now, the way it looks, things are still balanced to the long side. If this thing moves above 100, 560, you're probably going to see a nice little move here. And one that has held up really well, even through all of this, has been WDAY. This WDAY has just been relentless all the time. I mean, look at this thing. Even when the market was being sold off a little bit in the beginning of the week, this thing did not go underneath like 170 bucks. Very, very solid chart, much like TWLO. The only thing I didn't like about it is it did break through the highs here. This, let me draw it out here. This longer term high, this longer stretched out double top, but it was able to come back on Friday and clear and close above that. So this is the highest close it's had, maybe ever. I don't know. I'm not looking far back in the charts, but for a long time. So this is a very important level. We'll work with this one. I think you got a little bit of space right now to about 180 on this one. So let's just take a look at some of those. I got SQ, Goldman Sachs, TWLO, WDAY. Of course, you always have a trade on Tesla. You always have a trade on NVDA. You always have a trade on Netflix. Doesn't matter. Those always deliver some sort of value, either up or down. Just depends on what kind of day it is. So again, if you guys need some help, take a moment, visit thelincolnlist.com, click on the Trade Room tab. I want to thank you for watching this week's version of Stock Market Mutterings. Trade well, take care. Talk to everyone next week.